This is not something that I do often, but I am going to be selling some of my shares, not to take profit. I'm not even up anything crazy, just 6%. I'm holding 100 shares of FSPGX. Right now, the position is worth about $4,700. But my issue with it is, in the short term, it has been lagging compared to other growth investments like SCHG, SPYG, and VUG. So let's get into why that is the lower performance right now. So on those shorter time frames, looking at year-to-date average return of these funds that I just mentioned, FSPGX is up less than 3% year-to-date, while the other funds are up 7% or more. And then over the last year, same situation, FSPGX is up about 12%, while the other funds are up 18% or more. Going out to a further time frame, 5 years, they are pretty much in line with each other. But why is FSPGX, the Fidelity Large Cap Growth Index Fund, a bit behind? It's because it's a broad growth fund. It holds hundreds of stocks, nearly 400. So that diversification is great for stability, to get exposure to different sectors, but it also dilutes the impact of the big winners. The growth ETFs that I mentioned are more concentrated into those mega cap names that have been driving the market, especially when it comes to technology. In the short term, this fund has not been able to keep up. So let me be clear. I'm not saying that FSPGX is a bad fund. As we just saw over the last 5 years, it's actually in line with SCHG, SPYG, and VUG. Long-term, solid returns. But I'm at a point in my journey where I want to step it up a notch. Even looking back to one of my previous videos, the performance of FSPGX was higher than these other funds. Definitely, they're in line with each other, but right now it's not. I don't know how long it's going to last, but I'm ready to move on with a majority, probably 75 shares out of that 100 that I'm holding. I want more exposure in my portfolio to investments that are actually driving the market. That's the direction I want to take my portfolio right now. I'm going in a different direction, a different strategy. FSPGX was added for additional growth, not to be an investment with a performance very similar to others that I already have in my portfolio, like FXAIX, which is an investment that tracks the S&P 500, or FLCPX, the Fidelity Large Cap Index Fund. Looking at FSPGX against those two, in the short term, I'm seeing that same lagging performance. Average return year to date, FXAIX, about 11.47% up, FSPGX up less than 3%, and FLCPX up about 10%. And the same type of results when we look at the 1-year time frame, where FSPGX is lagging behind funds I already have in my portfolio. I haven't decided to go with one of those other growth funds that I've shared so far in this video. I'm going to go with VGT as my investment as I reallocate some of those funds. It's the Vanguard Information Tech ETF. It comes with a higher expense ratio than my FSPGX at 0.09%. It pays a quarterly dividend, unlike FSPGX, which pays semi-annually. And it has less holdings at 320. Technology has been the strongest long-term performer in the market. And VGT is going to give you heavy weightings into those big name companies that have been pushing the market forward, like NVIDIA, Apple, Microsoft, Micron, and Broadcom, as well as AMD, Advanced Micro Devices, which has their earnings coming up this week on August 4th. So, as I said, a higher expense ratio at 0.09%, but still on the low end. And this fund, VUG, has that stronger performance when it comes to the short term as well as long term, complement the other funds that I already have in my portfolio, like I shared FXAIX, for example. So it won't be a huge investment. I only have less than $5,000 currently in FSPGX, but I will give an update after I sell those shares and get them reallocated into other funds that are more in line with my current goals. Tech definitely fits my current strategy, but so do companies like Amazon, which you might think of as retail, but they wear many hats and have advanced into areas heavily into tech, like with their AWS, Amazon Web Services. I'm a buy and hold investor, and over time, I've built up a position of 27.5 shares into Amazon. I'm currently up 80%. Amazon has been expanding when it comes to cloud, AI, and logistics. Its market cap is beating expectations. It hit 3 trillion for the first time ever. So, this is the type of innovation that I want when it comes to my portfolio. When it comes to funds and individual stocks, I definitely have my foundation built out. And a fund like VGT will give me more of this higher growth potential without me having to pick individual stocks, especially as long-term holds in my retirement accounts. My strategy evolves sometimes, and when it does, I'm willing to rebalance, determine if my investments are still serving the purpose that they were added into my portfolio to achieve. And so I'm making this shift because I see the potential for higher growth without excessive fees. VGT has a low expense ratio, strong performance, and so I'm making this shift. This is a part of being an investor. I haven't lost anything, but I haven't gained as much as I anticipated. So share in the comments, are you holding FSPGX when it comes to your portfolio, or one of these other growth funds like VUG, SPYG, or SCHG? Which one was the right fit for your portfolio? Or did you go in the direction that I'm going now, focusing more heavily into tech or semiconductors with investments like VGT or SMH? Share your strategy, your comments, or questions, and check back to see how VGT fits into my portfolio, along with my core positions and select chosen blue chip stocks. Let's continue to be on track to build wealth together. Make sure you're making steps to mitigate your risk when it comes to investing, because our goal here is to make our money make more money. And so I won't be holding on to anything that's underperforming and not in line with my current strategy. If you made it this far, make sure to like, subscribe, hit that notification bell, hype this video, and share your thoughts. Thanks for watching. Okay, bye.